Health insurance is undeniably important, but it can also be pretty darn expensive. So here are some health insurance savings hacks that can definitely help save you some money. As always, if you have questions about your health insurance, you can reach us at the number on the screen or in the comments below. Remember, we are licensed nationwide and there is absolutely no charge for our services. You'll sometimes hear the plans in the marketplace referred to as Obamacare. These are plans under the Affordable Care Act. And under the Affordable Care Act, all plans in the marketplace must offer at least the 10 essential benefits. Marketplace plans must offer at least the 10 essential benefits, and then you can purchase additional coverage for things like dental and vision rather inexpensively if they're not already offered by your plan. Now, of course, some plans will offer better benefits than others to entice beneficiaries. Remember, for marketplace plans, you cannot be charged more or denied based on a pre-existing condition. So now let's talk about some ways to save money on those marketplace plans. First, let's talk about your MAGI, which is your modified adjusted gross income in relation to those premium tax credits. So a premium tax credit is basically a tax credit that is applied upfront and is reflected in a discounted monthly premium. You may be eligible for a premium tax credit if your income and household size meets certain criteria. Now, in recent years, eligibility for premium tax credits has changed a little, and many more people are eligible for premium tax credits than in years before. But something that's very important in determining your eligibility is that MAGI, Modified Adjusted Gross Income. Your MAGI, in all honesty, is very similar to your AGI, which is the number that you put in when you file your taxes. There are a few little changes, but for most people, it's going to be the same number. Now, if your MAGI or your AGI is too high and makes you ineligible for a premium tax credit, there are definitely ways that you can lower your AGI, but we would recommend that you speak with a certified financial counselor. They may be able to guide you towards certain deductions that you may be able to apply to lower your AGI and MAGI to a point where you are eligible for a premium tax credit or a larger premium tax credit if the case may be. Remember, when you apply for a marketplace plan, they will ask you to estimate your income for the upcoming year, and it's very important that you estimate as accurately as possible. If you underestimate, you may have to pay a portion of that premium tax credit back when you file your taxes. If you overestimate, it's not really a problem. You may just end up with a larger refund when you file your taxes. If you're still ineligible for a premium tax credit, don't worry, there are other options, and we're going to talk about that later in the video. While we're talking about eligibility for premium tax credits, let's talk about those silver plans. So if you are eligible for a premium tax credit, you may notice a little pop-up that says extra savings with a silver plan. And yes, this may be the case for you. You may have lower copays or co-insurance for silver plans if you're within a certain bracket of eligibility for those premium tax credits. So if you do notice those pop-ups, pay extra close attention to the silver plans because they may save you a significant amount of money. Another important way you can save money on a marketplace plan is to pick the right plan. Premiums are not the only thing that you should be looking at. There are other numbers to take into consideration, as well as benefits and networks. Now, a low premium may be great. However, if that plan has a restrictive network and you need to see a doctor or specialist who is outside of that network, then that is going to cost you more money, so that plan is ultimately not going to serve you. You should also look at your deductible and out-of-pocket maximum when comparing those numbers. Now, there is such a thing as a high deductible health plan. Usually these plans will have lower monthly premiums because of those higher deductibles. There's usually an inverse relationship between premiums and deductibles. Now, because these plans have higher deductibles, they're really not ideal for people that make use of their health insurance regularly because it's going to be more expensive for you to pay out of pocket until you've met that deductible. However, if you're somebody with very large medical needs who's going to meet your deductible very quickly, or somebody who really uses your health insurance for preventative care and emergency unexpected services, then this could be a great way to save money. Now, if a marketplace plan isn't for you, either because you are ineligible for a premium tax credit or because you really do need the flexibility of a nationwide PPO plan, then you may want to look into a short-term medical plan. A short-term medical plan is a type of private insurance, and generally speaking, you can access a plan for up to 3 years. So with a short-term medical plan, you'll have access to nationwide PPO coverage, and that is almost impossible to find on the marketplace. You'll have access to HMOs and sometimes EPOs, although not always. Now, short-term medical plans, though, will have medical underwriting. That means you could be charged more or denied based on a pre-existing condition. And if you do have a pre-existing condition, it may not be covered at all, but it certainly won't be covered in the first year of a multi-year plan. Now, that's not the case with a marketplace plan. There is no medical underwriting, which means you cannot be denied or charged more based on your health, and pre-existing conditions are, of course, covered. Short-term medical plans don't offer those 10 essential benefits, so something like pregnancy is not covered by a short-term medical plan. And of course, pregnancy would be considered one of the 10 essential benefits covered. Now, because there are no 10 essential benefits and there is medical underwriting, you may be able to have access to a very low monthly premium, especially if you're somebody younger in good health. However, on the marketplace, because there is no medical underwriting, you're not going to qualify for a lower rate based on your health. However, you may qualify for a premium tax credit based on your income. Something else that I do want to mention, short-term medical plans actually aren't available in all states, and even if they are, they may not be ideal for your family if you have young children. In the past, short-term medical plans were always referred to as catastrophic coverage plans because they really were a bare bones type of plan. Now, that's really not the case anymore. You can still access a catastrophic coverage plan off the marketplace in a private insurance. However, so many short-term medical plans really do offer much more extensive coverage, so you wouldn't necessarily consider all short-term medical plans to be catastrophic coverage plans. However, catastrophic coverage plans do still exist, as I mentioned, both off and on the marketplace. Basically, they're a type of high deductible health plan, or HDHP, that offers low monthly premiums. So catastrophic coverage plans on the marketplace will still offer some benefits even if you haven't met that high deductible yet. For example, you'll still be able to visit your primary care physician 3 times per year even if you haven't met your deductible, and that will already be covered. For a marketplace plan, catastrophic coverage plans are really only for those under a certain age, although you can apply for a hardship exemption if your income meets certain criteria. What's important about a catastrophic coverage plan is that it offers an out-of-pocket maximum. An out-of-pocket maximum is there to protect you from major medical bills. So with a marketplace catastrophic coverage plan, you'll not only have access to your PCP at least 3 times a year, but you will also have that out-of-pocket maximum. Now in 2024, the maximum out-of-pocket maximum for a marketplace plan is $9,450. So what does that mean? Basically, you will have a small list of services covered prior to meeting that deductible. But if you do need to do things like go to the urgent care or even the ER, you're probably going to have to pay out of pocket. However, should you have larger medical needs, perhaps an unexpected surgery, and that amount is over $9,450, well, you would still only have to pay that out-of-pocket maximum, that $9,450, and then your insurance would take on the remainder of the in-network covered services. Now, that may sound like a lot, but as I said, it's there to protect you from major medical bills, which can be tens, if not hundreds of thousands of dollars. So in comparison, $9,450 doesn't sound like so much. These types of plans are good for maybe younger or healthier people who are looking to take advantage of only the most basic services, but still have protection from unexpected major medical bills. And yes, the premiums are usually going to be much lower. However, you're not going to be able to apply a premium tax credit if you're eligible. You're just going to have access to a lower monthly premium because the plan itself is a more bare bones plan. Finally, let's talk a little bit more in depth about HDHPs, specifically with regards to HSAs. We've already sort of touched on them, but I want to go a little bit more in depth. HDHPs, as we've discussed, are high deductible health plans. Now, some offer a benefit known as an HSA, which is a health savings account. This is a special type of interest-bearing account, and an HSA is only available with an HDHP. Every year, the IRS sets a minimum deductible in order for a plan to be considered an HDHP. And in 2024, the minimum deductible for an HDHP is
$1,600 for an individual and $3,200 for a family.
But it can be more, up to that $9,450 out-of-pocket maximum. And you will see that as slightly more common than one of those lower high deductibles. If you enroll in an HDHP, many services will be covered prior to meeting your deductible, such as preventative care and wellness visits, so that's very similar to those catastrophic coverage plans we just discussed. But let's talk about HSAs, because this is really the great money-saving hack when you're talking about HDHPs with an HSA. HSAs, as I said, are health savings accounts. Now, the amount that you contribute is pre-tax. That means it is going to lower your taxable income. This could push you into a lower tax bracket, possibly making you eligible for a larger refund, and it may lower your tax bracket to a point that your MAGI is low enough that you could be eligible for a premium tax credit if you were ineligible before, or at the very least, it could make you eligible for a larger premium tax credit. Every year, the IRS sets a maximum amount that you can contribute to your HSA. And in 2024, the maximum amount that you can contribute is
$4,150 for an individual or $8,300 for a family.
The money that you can contribute sits in an interest-bearing account, and that interest is not taxed. And as long as you withdraw it for a qualified medical expense, then there is no penalty or taxation. And the list for qualified medical expenses is really quite long. It even includes things like chiropractic care, dental bills, or even over-the-counter medications. So you can definitely utilize that money for a variety of different services and products. But you don't have to use that money. You can let it sit there from year to year, and it will roll over from year to year. It is still your money. Now, it can continue to accrue interest, which will not be taxed, or you can even invest a certain portion of it, and that money earned will again not be taxed. And if you hold on to that money until you turn 65, it will actually convert to a basic retirement account, and you can use it as you see fit. So those are some of the health insurance savings hacks that we've come across. If you've got any, we would love to hear from you, so please let us know in the comments below. Or of course, if you have questions, you can reach us not only in the comments, but at the number on the screen. Remember, there is no charge for our services, and as a bonus hack, make sure to work with a broker when you're enrolling in your insurance. Many brokers do not charge for their services. We certainly don't. But working with a broker will make sure that you have expert advice to ensure that you are getting the most bang for your buck. As always, thank you so much for watching and have a wonderful day. Bye-bye.
If you want to learn more about some health insurance options, if you want to retire early, make sure to check out this video. And don't forget to like and comment and subscribe. Thank you so much. We'll see you next time. Bye-bye.